Good afternoon, and thank you so much for joining us today for our Executive Insights series presented by AMI's Payments Practice. Today we're going to be covering cross-border P2P. My name is Abel Delgado. I am the Digital Marketing Director for America's Market Intelligence, and I'm going to be serving as the moderator today for the presentation. So to give you a quick idea of what to expect, basically we're going to have about 30 minutes or so of presentation itself. And then after that, we're going to be handling questions for about 15 minutes or so. So we'll try to make this as quick as we can in order to make it as efficient as we can for you as well, to give you the information that you need, and we can go about our days. In terms of asking questions, you can do that at any point in time in the webinar. You don't have to wait until the end. If you look at your screen, you should see a series of icons. One of them says Q&A. If you click on that, it will bring up a window. You can type in your question in that window, and then you will receive it, and then we'll try to answer as many questions as we can at the end of the webinar. All right, moving right along to our legal notice. Basically, I'm not going to read it because it'll just take too long, but the gist of it is that whenever possible, we've tried to verify the accuracy of the information that's being presented here today, and we're not going to accept responsibility for such inaccuracies that may happen in the data if they remain unverified. And there's other things there that you can read at your leisure. Another question before we move right on is that we always get is the presentation going to be available after the event? So I want to let you know up front that yes, it will be, and also a video. So what we'll do is send you out after the event, the slides of the presentation itself, as well as a link to the video. This will be a private link that you can only access via email because this is a very exclusive kind of event. This is an event that is for the general public. It's for a select group of attendees, including you, of course. And so basically, you'll be entering your email, and then you'll be able to access the video of the event after. So that's how that would work. We'd send you a link, and then to access the video itself, you would then enter in your email. We'll send out the details as far as that's concerned later on. Probably tomorrow you'll receive the message with the materials. All right, moving right along to our speaker intros. I'm going to allow them to handle this themselves because I think they're more than capable of doing that. So I'm going to turn the floor over to them so our speakers here today can introduce themselves. Folks.
Thank you, Abel. Hello, everyone. Welcome. Thank you very much for joining us. My name is Lindsay Lear. Most of you know me. I lead the payments practice at AMI, and we're really excited to have this event. It's our first private client-only event. So if you're here, you already have an established and much valued relationship with us. So we want to thank you for being here, and we're excited to share our early thinking on this interesting topic and give you guys exclusive access to some new data and some new insights in this area.
Thanks, Abel. Hello, everyone. My name is Ignacio Carballo. I am AMI Payment Practice Southern Cone affiliate, and I am also researcher and professor in different universities. Hope you enjoy this time for learning about this so interesting topic and how the crypto are changing not only the financial system, but also the cross-border P2P payments. Be very welcome and enjoy it.
Excellent. So we'll dive right into our content. I want to just give a word of introduction here. Our topic today is cross-border P2P with a focus on cryptocurrencies. And it's an extremely timely webinar because, as you all probably have noticed, over the past 6 to 12 months, cryptocurrencies have been coming up more and more in mainstream media. For a long time, cryptocurrencies have been on the fringe, and even us as analysts, we have not looked into it in depth because our clients weren't yet interested in understanding this part of the industry. We've now gotten to the place where these flows are significant enough in value that we have to start paying attention. So the goal a little bit of today's webinar is to simply put this flow as well as overall cross-border P2P into context so we can understand, get our bearings in order to move strategically forward. These are our this is some very early thinking and analysis about this topic. We're going to be continually analyzing and evolving our thinking over time. And your questions today and your response will help us shape how we're thinking about this, these numbers that we're going to present. A note on methodology. A lot of the data that you'll see in this deck comes from this fascinating report from Chainalysis. I recommend that you all take a look at it. It's publicly available, and Abel will share the link in the chat right now in case you want to download the PDF. They go through their methodology, which is based on monitoring activity on crypto platforms. You know, it goes through how they came up with the numbers, some of the limitations to this methodology. And I wanted to mention that because crypto by its very nature is difficult to track, and it's designed that way. And so a lot of these estimates are estimates. They're directionally helpful, but not necessarily meant to be taken, to the dollar amount. To supplement that, we looked at World Bank data for our traditional remittance numbers and supplemented with several interviews with both crypto and fiat currency remittance players operating in the region to add some of the insights that we're going to talk about today. Okay, and make sure you do stay until the end of the webinar. We have a special surprise for all of you, an opportunity to win a prize. So please stay till the end. We also want to get your questions and kind of feedback and response to what we're talking about today. All right, so before we look at some of the numbers, I would like to take a poll. We're talking about cryptocurrency. The whole point is to showcase that cryptocurrency is now something we need to pay attention to. And I want to know from our audience, how are you using cryptocurrencies today? Is it already a part of your business? Are you developing cryptocurrency in your business? Is it in your roadmap, but it's not yet in use? Or are you not looking at it at all? So go ahead and take a moment to respond. We'll share the results once everyone has had a chance to respond. Give it about 30 seconds. Be really interesting to see where we're at so far in the region. All right, looks like almost everyone has had a chance to cast their vote. So let's go ahead and close. All right. Oh, very interesting. So we have most folks are either building it or in the roadmap. So that's kind of in line with what we're talking about today. We have a couple of players leading the charge of cryptocurrencies in the region, and more folks becoming interested and wanting to learn about it, wanting to figure out what relevance it has for their own business. So thank you all for your response. Terrific. All right. So what we're going to do right now is go through some numbers in Latin America to understand how cross-border P2P and crypto fit into the larger picture. All right. We like to, when we're thinking about a new vertical in the industry, we like to put it in context to figure out, why is this relevant? Well, is this relevant? Why is this relevant? And how relevant is it? And before we even look at P2P numbers, just some general metrics to get our bearings. This is relevant today because Latin America is more digitized than ever, thanks in large part to shutdowns related to COVID-19. We're now at over 70% bank account penetration when we consider the influence of wallets and neobanks. So we have a real critical mass of people wanting to use digital payments more so than ever. Similarly, e-commerce has now achieved 10% of total retail spend. Due to the pandemic, this number accelerated, accelerated by 2 to 3 years when we speak to merchants and overall players, up from 6% in 2019. At the same time, cross-border e-commerce was down in 2020, mostly due to the complete contraction of the travel industry. And cross-border is, of course, a segment of the industry that is very lucrative for many players involved. And so as an industry, we're interested in understanding when cross-border flows will recover and which cross-border flows are still active and growing despite all of the turmoil we've experienced in the past year. And then finally, difficult to put a hard number on it, but we know that crypto is increasingly growing in relevance almost on a daily basis. We're going to look at that a little bit more. So those are just some touch points to get our bearings here. Again, when we look at the big numbers in Latin America, important to put this stuff in context. So when we think about digital and electronic transactions, credit and debit cards are the first thing that come to mind. We see our overall market size in the region in billions of dollars. We have e-commerce, all of e-commerce, considering all payment methods. We have inbound remittances at almost $100 billion. Those refer to traditional remittances, or what we call fiat currency remittances, based on a traditional or official currency like the dollar or the euro. Then maybe for the first time, we have a sizing, again, based on that Chainalysis report, estimated size of inbound cryptocurrency flows into the region from July 2019 to July 2020. This is our most updated data. And for efficiency and ease, we're going to say that that's the 2020 market size, so that we can compare it with our other numbers. And so this number is small when we look at the rest of these other big chunks, but it's on the map and it takes up a good visible chunk of that map. And so something that is now on our radar that we need to be looking at. Now that's kind of static volume numbers. Let's look at growth and the performance of these different verticals from 2019 into 2020. Which also gives us an indication of what that behavior might look like going forward. If something is growing in the hardest of times, it's most likely going to grow even faster as things are improving and recovering. So credit and debit card overall volume fell in 2020 in Latin America. When we look at e-commerce, it's important to consider the segments. Overall, e-commerce grew 16%. You may think that sounds like a low number based on what you've heard from different players and in the media. Some segments of e-commerce, like delivery apps, like grocery, like pharmacy, like entertainment, grew in excess of 100%. When we think about e-commerce overall, a large chunk of which is travel, our overall analysis tells us that it grew 16%. Cross-border, again, shrunk 10%. And so again, what we're trying to do is think about what cross-border flows are maintaining their volume and even growing. Remittances, overall traditional remittances globally, you may have heard from headlines that remittances fell in 2020, as did almost every area of the economy. Global remittances fell at the global scale 7%, as well as remittances to emerging markets. However, Latin America stood apart from these numbers. One of the only regions in the world to have barely positive growth, more or less maintaining its stability. And we'll look at some of the reasons why in a moment. But it's nice to see, when we compare, this is a cross-border flow compared to e-commerce that remained positive. And then again, we don't know how much crypto grew necessarily, but we do know that it grew, and probably by a large amount because it's coming from a small base. So here we have what grew over the past year and what we can expect to continue growing this year. Okay, so we'll go now into, now that we have a little bit of the landscape, what is a little bit more in detail, what is this really looking like? And what kind of opportunities are we going to, should we be thinking about in terms of digitization and commerce? So again, going back to looking at traditional remittances. Now, again, for the purposes of this webinar, traditional refers to the currency, meaning it's connected to the dollar, to the euro, or some other central bank currency. It does not mean cash versus digital. So we look at these numbers. We know that in Latin America, Mexico dominates more than, about half of the total region is taken up by Mexico. And let's take a look at which markets grew. Which of those markets were helping to support positive growth in 2020? Mexico, Guatemala, DR, Jamaica, Bermuda were the positive growing countries. These are the markets that are connected to the United States. And the reason, some of the drivers here are the US actually experienced lower than expected unemployment during COVID-19 lockdowns, which enabled migrant workers to send more money home. Also, the adoption of digital remittances by traditional money senders like Western Union, MoneyGram. COVID-19 accelerated the adoption of sending money digitally when stores were shut down and it was difficult to leave your home. People were still able to send money. And of course, increased economic hardship in the receiving countries, we know that remittance is a very emotional process. And when your family members are suffering or going through high financial hardship, senders generally scrimp more, save more, and work harder to send money home. So this is what kind of supported the maintenance of remittances at a positive growth level. So again, trying to put all this in context for us, when we look, that was one cross-border money flow, right? Traditional remittance. There are two others that we're going to look at in this webinar. One, so you see that in red, inbound remittances, traditional. This dark red here shows that compared to cross-border e-commerce. In almost in several countries, especially Mexico, Colombia, Peru, remittance is greater than cross-border e-commerce. In Brazil and Chile, countries we don't think about as being remittance receivers, cross-border e-commerce is larger. And then this inbound crypto flow is what's really interesting to look at. So Brazil, look how large it is compared to traditional remittances. This signals us that there's something going on in Brazil that we should be looking at, even if we're not thinking about Brazil as a market for inbound remittances. Overall, again, we're looking at crypto being about $25 billion, exactly the same amount as cross-border e-commerce. And I bring this up because there are dozens, if not more, companies in mainstream payments industry going after cross-border e-commerce in Latin America, which is in 2020 was a $25 billion market size. It's highly fragmented, highly competitive, lots of folks fighting for this chunk of the pie. We have the same market size in crypto inbound flows and a lot fewer players playing in this space and a lot fewer, much less diverse players playing in this space. And so this is just to say, let's spread out our efforts and start moving into a segment that is the same size today as this other very popular segment and growing rapidly into the future. All right, now we'll dive a little deeper into these crypto flows. This Chainalysis report suggests that globally, increasing, the majority of crypto business is on the professional scale, professional investors, B2B transactions, over $10,000 in value. And what they consider retail transactions are grassroots, everyday users using crypto for everyday purchases. And in Latin America, again, it's going to vary by country, but for the region, the estimated share of total flows that are retail is 17%. That means P2P transfers and also transfers use of crypto to make purchases, compared to professional investors, crypto-based hedge funds, and even B2B purchase of inventory. This allows us to understand these crypto flows a little bit more, and especially at the country level. So when we apply that 83%, again, it will vary by country, but if we take this as a model, we can, and look at the numbers, crypto P2P is now representing 8% of the traditional market. Okay, in this column, we see the estimated market size of cross-border crypto-based P2P versus traditional cross-border P2P. You'll notice that the volumes are similar. Mexico, Colombia, Argentina, Venezuela, Brazil is larger, but the volumes are similar. But when we compare it to the traditional cross-border P2P market, the percentages are wildly different. Mexico, crypto is representing just 1%. But in Chile, look at the comparison. It's massive compared to traditional cross-border. Now, why is this significant? This tells us, when we think of remittance, Mexico and Central America naturally come to mind. We don't tend to think about Southern Cone countries. But this tells us that there are significant flows, retail P2P flows to Brazil, Argentina, Venezuela, Chile, which indicates an underserved remittance market and potential use cases we hadn't been thinking about that are different from what we see in Mexico and Central America. And it's also important to notice that even though crypto makes up only 1% of traditional remittances in Mexico, the volume is similar to the other countries. So The share is small, but that volume is still significant and something for us to be thinking about. Okay, so again, this is a model that we're using to understand this market, but when we combine crypto P2P and traditional P2P together, we come up with this market size, estimated market size per country. Mexico is dwarfing the rest of the region, but we have interesting market sizes in these other markets. And when we combine these countries together, we get a total of $58 billion in cross-border P2P, compared to 22 billion of these countries you see on the slide in cross-border e-commerce. Again, just to put this in perspective, e-commerce, cross-border e-commerce is a highly desirable vertical to be in. And we want to showcase that this P2P market is double the size in some cases and growing faster. Okay. So, looking a little bit more into the use cases of these crypto flows and traditional flows. When we take the Chainalysis report that we were mentioning, combined with interviews that we did with several different crypto companies working in Latin America, we heard the same thing over and over, that within crypto, you can divide these P2P flows into 3 different use cases that are more or less even. About a third goes to household spending, just like traditional P2P payments do. About a third goes to savings and investment. So whether your currency is rapidly depreciating and you want to put your money in a more stable currency, or you want to do speculative trading, savings represents about a third. And then another third represents purchases. A lot of that is cross-border e-commerce on AliExpress, for example, and increasing domestic social and P2P type purchases are taking place. So when we think about this split and we think about the split of traditional versus crypto P2P flows, we come up with these splits per country. Now, savings and purchases, we don't usually think about when we think about P2P, cross-border P2P or remittance, but it's representing more than half of the volume in Chile. Venezuela, Argentina, and Brazil, it's also significant. In Mexico, these alternative use cases, savings and purchases, are very small compared to traditional remittance household spending. But again, because of the market size of Mexico, the actual dollar amount is going to be significant. So this gives us some detail into how to think about cross-border P2P and remittance and how to strategize and showing the differences between countries, and that each country is going to require a different strategy. So I want to, at this point, the savings vertical is very interesting, and it's something that is continuing to bubble up and become more and more on our radar more often. And it's, of course, most relevant in countries where with currency volatility. So I want to invite Nacho to tell us a little bit about the data here and speak from his own experience as being Argentinian and seeing this play out.
Thank you, Lindsay. Thank you very much. And thanks, everyone. As Lindsay was saying, in the crypto phenomenon, we can find different incentives that push the people and the companies not only to hold cryptocurrencies, but also to use them for different reasons. They might be purchasing, they might be P2P cross-border payments, or they might be as an investment. In the case of countries as Argentina, unfortunately, and as Venezuela, of course, where we have a high inflation and constant volatility in terms of economic value, those reasons, of course, change. And as you can see here in this chart, and remember this is data that by far we must have one thing in mind, and is that all these numbers, without doubt, they are a floor. They are underestimated to the extent that, as you well know, as more players enter into the crypto scene, such as Visa, PayPal, Tesla, MasterCard, and the price of Bitcoin goes up as it did recently, more people join the crypto boom. But in the case of Argentina, it's not only a reason of momentum in terms of the institutionalization of this phenomena, but also, as we were saying, a way of currency protection. So what we have seen here is that at the beginning, those interested in Bitcoin and other cryptocurrencies were especially young people familiar with the technology who were looking for alternatives to invest that might have been their first saving. But paradoxically, the sophisticated savers had certain distrust, particularly because they saw it only was a kind of way of invest outside of the system without the regulatory protection. With the pandemic came the adoption of cryptocurrency by large, and this happened in all Latam, companies and consumers and household growth, and it was pushed. But in addition of that, what we can say for the Argentinian case is not only the booming in the price, but also something that is very important to understand, that are the restrictions in the purchase of foreign exchange. So in this case, and this happened also in Venezuela, but by far, by much more years ago, in the case of Argentina, we have a limit imposed of buying 250 American dollars per month. And once those restrictions were set during the last year, the crypto scenario changed, and not only because of Bitcoin, but as you might see here in the left side of the chart, also because of another kind of stable coins. You know, these stable coins are particularly useful for keeping the value and not and maybe not seeing an investment opportunity. So something that we might be happy at some point is that all this phenomenon that started for bad reason, economical bad reason, has pushed a whole ecosystem. And that ecosystem, Lindsay, if you might go to the next slide, is represented by a number of companies that are operating not only in Argentina, but also in another part of the region. So what you can see here in the left side of the chart are the top global exchanges. I'm sure that those of you who have here or done something with crypto know Binance, know Coinbase, which had recently done its IPO, know OKEx. But if you see the local exchanges, this is a picture that represents pretty well the institutionalization of this phenomenon. So there are much more exchanges in Latam, and of course also in these countries that we are showing to you. But when you have companies that are working in different economies, that for sure again a reflect of the institutionalization of this phenomenon. So in terms to finish, the general idea is that once we have this shift from young early adopters, crypto users to more institutional users, we can see how the economy is changing, the financial system is changed by it. So for example, at the beginning of 2019 in Argentina, an exchange that you can see there in the first row called Bitex, with a traditional bank here in Argentina, which is called Más Venta, they managed to realize the first small export operation with Bitcoin. So there was a real export to Paraguay from Argentina and paid by Bitcoin. And those are the externalities that I think that we think here in AMI that we need to have under our scope and that are changing our business. Of course, Argentina is not a country that has a lot of remittances because of their population inflows, maybe as we can see in Mexico, maybe as we can see in Colombia, maybe as we can see in of course Bolivia and Peru. But it's interesting to see how the economical situation and the volatility and the weakness of our coin has pushed this sector, and of course the opportunities for doing business in finance.
Perfect. Thank you, Nacho. Super interesting. So, Nacho just spoke about, the idea of savings and investment and getting your money into a more stable environment as a top use case for what we're seeing with crypto. There are the other use case which I want to really emphasize is both traditional P2P and crypto P2P enabling commerce and purchasing. Traditionally P2P has been simply a payment to friends and family to help them sustain their lifestyle, to help them get by. But increasingly, we're seeing these players activate and enable actual commerce, which is both exciting and potentially risky for market players. And these are just a couple of examples, but there are others, and we're going to continue to track them. But within crypto money senders, using crypto to make purchases online. In our interviews, AliExpress continued to come up as a top merchant that is, driving Bitcoin-based purchasing for people who maybe don't want to use a credit card online, don't have a credit card, but are interested in experimenting with other payment methods to access goods that they want to consume. Another example, really interesting case here, Creepex, which is a crypto platform based in Paraguay. Actually, on their website, they link to various Facebook communities that they've created to encourage and educate consumers about using crypto to buy cars, to buy real estate, to sell personal goods, almost like social selling, informal selling, using crypto, completely going around the banking system. On the fiat currency side, we see, both local Latin American players and global players working to enable commerce. Global 66, for example, Chilean remittance operator focusing on the banked population, in addition to P2P transfers, are advertising payment to freelancers, moving into the B2B space, and even the purchase of Google Ads, for example, which is fascinating and something to really watch, because Google Ads or online advertising and other types of services is really reserved for card payments. And this, Global is trying to enable direct bank account payment on their platform of this type of product. Wise, formerly TransferWise, a global player globally, they've turned themselves into a wallet connected to a card, which is connected to Apple Pay to enable purchasing. They're also making a strong push into everything B2B, encouraging companies to pay invoice payments on their platform, as well as disbursements, similar to the freelance use case we saw for Global 66. And so this is where P2P now becomes more of a commercial opportunity and a threat to traditional flows, as well as expansion of new flows and the ability to grow the pie and capture spend that's traditionally made in cash. Okay. And of course, talking about remittances as a force for digitization, one of our hypotheses is that crypto is going to be a greater force of digitization than traditional remittances. That is because it is being born in the digital era, whereas traditional remittances has grown over time, and they've had the ability to create these widespread cash out networks where receivers can get cash. They've become used to that experience, and they've become dependent on that experience. And despite many attempts, traditional players have had a very difficult time digitizing the cash out. More than 90% of remittances are still received in cash. The pay side is much more digitized than it has been, but the payout is largely still cash. Crypto players, on the other hand, as well as as well as fiat P2P players that are focused on the banked population, these guys were born in the digital era. They haven't had the investment time or dollars to invest in those cash out partnerships and networks. And so you automatically have a more digital experience that is encouraging people to digitize faster than they would otherwise. And this brings me to a point that I love to make. When we look at what, we as analysts, we try to look for lessons and patterns. And we have the benefit of being able to look at history. And when you think about digitization in Latin America, when you look at mobile money, digital wallets, even e-commerce, when you try to digitize from the bottom up, meaning going directly to the bottom of the pyramid and trying to convince them to trade in their cash for a digital solutions have flopped. it's been a lot of investment for very little reward. However, when you go more to the middle of the pyramid and encourage those folks to pull up their peers in the bottom of the pyramid, now the lower income and the cash-based folks have an incentive because they're connected to folks in the middle of the pyramid who are already using digital tools. They have an ambassador who can teach them how to use that digital tool. They have an example and a success case. And that's what crypto is doing. It's attracting more middle of the pyramid folks who want to get involved in this industry, in this segment, which creates momentum and is a catalyst for this what I call last mile digitization, because already 70% of the market is already using some sort of banking product. And so thinking about crypto as a tool to digitize from the middle outward, I think will be the successful strategy going forward to get to that last 20% of the market that is still outside and using dependent on cash. All right, so that's kind of the bulk of our presentation. We're going to get to questions in a moment. So in the last final slides, I want to remind you to please submit your questions through the tool, the Zoom tool, and we'll get to them at the end. And I just want to really drive home a couple of key points here, some final thoughts and the implications. So cross-border P2P payments maintained positive growth during the pandemic when most other money flows declined. We can expect increasing investment from both global players and fintechs in this area. So it's now something we need to have on our radar for a payments company, if we're a merchant, a bank, thinking about what kind of investment, what we want our play to be in this cross-border P2P. Also, it will be a driver of last mile digitization. We know from experience that when people have a compelling reason to engage digitally, they do. They need that compelling reason, however, because cash is very valuable in many ways. And so some of these crypto players and engaging in cross-border remittance can be that compelling reason for a lot of folks. Looking at cross-border P2P remittance for purchases and payouts, this is a up-and-coming huge opportunity. Just like in the domestic market, there's now starting to be a blur between domestic P2P and domestic P2M, a P2P payment to a merchant that looks very much like a P2P payment is happening in every market domestically. That's also happening on the global scale. And as this happens on the global scale, that makes things more competitive, a little bit more difficult to understand. It also creates new use cases and blows up the industry. So this is something to really be closely tracking. And finally, as you know, what Nacho was mentioning, savings, protection, and investment is going to be a huge driver of crypto P2P and crypto trading, crypto flows. We see this gaining momentum. We see this happening already, and we can only expect it to grow. Okay, and so some final questions that we're asking that we want to pose to you guys, that we're posing to ourselves. We didn't talk at all during this conversation about fees, about exchange rates, about security. That's for another conversation. But a question that we need to answer is who, when we think about who's going to win, who's going to be most competitive, who's going to capture this prize, thinking about who is delivering the best combination of fees, exchange rate optimization, user experience, security, and the ability to use the funds in your wallet. Those 5 factors are the determinants of who will win, who will be the winner or winners in this emerging segment. And there are other questions, right? How will international cross-border P2P interface with domestic P2P? Is there a play there? What's the stickiest funding source? Who's going to solve cash in and cash out? What's the value proposition needed to truly digitize folks in the short term and the long term? These are questions that we want to pose to you who are our clients and who we want you to be thinking about to help you be most strategic as possible. It's also the questions that we're asking so that we can help bring the sharpest insights to you guys in our wider network. Okay, so thank you guys for your attention. This is a topic that clearly brings out a lot of passion. I want to give you all we're going to have some Q&A right now, and you'll see this QR code. If you guys want to schedule if you want to talk about these results, talk about this data, ask questions more one-on-one, or talk about anything else, You scan that QR code to schedule a consultation with me, consultation, just a phone call, just to catch up. And in a moment, we'll have the opportunity also to do that using a poll. But I want to go to our questions.
Okay, Lindsay, no problem. Let's take a look here at what we have. One of the first ones that we saw in here basically is talking about crypto itself. And it's basically saying, since crypto is hard to track, is it a suitable replacement for cash?
Well, it's an interesting question, and I'm curious as to what they mean by suitable. But in many respects, yes, absolutely. That's the attraction and the draw of crypto for a lot of folks who want to avoid the banking system, who want to avoid paying taxes, who want a quick and easy solution. Cash is still used to make big purchases in Latin America, but it poses security risk. And of course, holding cash in your local currency can be risky to your overall, maintaining your wealth, as Nacho was saying. So in many ways, that's the draw. Because it can't be traced, because it's kind of invisible, it helps people maintain that anonymous status that is very popular. So I would say, yes, that's definitely part of the draws, part of the attractions.
All right. So another question that came up is asking about trust and security, basically from the perspective of the LATAM customers. And it's asking if they're really ready to trust crypto exchanges at this point.
Nacho, I'd love for you to comment on that.
Yes,
anecdotally,
yes,
right?
Thanks a lot. No, that's an amazing and very usual question. And the answer is that it can be and cannot. So what we always recommend to the users is that they must do a research. Unfortunately, because the most part of these exchanges, they are not under the financial regulatory scope yet. So one way of being sure about which are serious exchanges and which are not is, for example, what we were saying before. See which one of those are in the market for a long time, which one of those are in different countries, which one of those are in a public in public forums. The truth is that there is a risk today in cryptocurrencies, not only because of exchanges, but also because you must remember that all the crypto, at least the main cryptos, they are perfectly traceable. So we can know where each crypto comes from and is going through. So there is like a critical market there about which crypto are you buying. So they're non-fungibles as the cash is, and that's a particularity of this market. But in order to answer your question, I will say that yes, it is pretty sure nowadays. At least it's much more sure that 3 or 4 years ago, this recently crypto boom, and mainly what happened after 2017 when the last price 88 was recorded, is that the sector became much more serious in terms of what they are doing and what they are not doing. So again, if you go to different websites, you will see that in each country you can find probably more than 15 exchanges, and we're showing to you guys only 5 or 6 because those are the most well known, and that can be a synonym of that they are serious. But the truth is that it's getting more and more transparent and clear month by month and year by year. Nowadays, here in Argentina, also in Chile, we were speaking with Lindsay, for example. Sorry, Lindsay, I will take just 2 minutes more, but the day before yesterday, one student of the university asked us if they can pay with crypto. When we said that no, he said, okay, but can I make a friend of mine in Argentina pay with a credit card and I will transfer the crypto to her? And it was a bank employee of almost 50 years old. So we are seeing these kind of things much often, and that means that once this market enter into the most part of the population, the consumer habits also change. And once the consumer habits change, the need of some kind of regulation in terms to separate which are the serious and which are not the serious, which are the dangerous or risky and which are the not risky exchange are most needed.
All right. Thank you so much, Ignacio. We're kind of over our time here, so we're going to have to wrap this up real quick. But before we do, we're going to get to a couple of other items on there. And I do want to answer one question that always comes up. Are the materials going to be available? And within the next day or so, just to answer that question, we will send out the materials via email. You will get a link to the video of the webinar and also a link to the slides to be able to download them as well. So, Lindsay, I think that we have a couple of other things to go over real quick. No, a couple of last minute polls.
Yes, exactly. So, you guys have that QR code scanner up there, but want to give you another opportunity. We'll launch a poll. If you'd like, this is a private poll. If you'd like to have a call with me, with Ignacio, and also with our Brazil specialist, Marina, we just want to make this available to you guys. We'll follow up with email. If you select that, yes, you'd like to have a call, just an easy way for us to schedule with you. We want to connect one-on-one and have that opportunity to schedule a follow-up call, go over any of this data or anything else you want to look at. So go ahead and just take a moment. And then before in our last minute, I want to thank you guys for that response. We'll take that and get in touch with you. And then finally, I'm going to let Nacho as a token of our appreciation and for you showing up today and being part of our community. We want to give you the opportunity to be a part of this event, and I'll let Nacho tell the details.
Thanks, Lindsay. Yes, we as AMI, we are participating of the IMTC LATAM 2021, which is one of the most important cross-border and international payment forum in all Latin America. We would like to invite you, those that think that it might be valuable for your business, for your companies to participate, to give you a free ticket. So if you are interested, please just answer and the pool that you can see in your screen, and we will be in contact with you.
All right. Thanks, Nacho. That's very exciting. Thanks. It's next week coming right up. So if you're available and interested, please let us know. We'll enter you in the raffle and contact you over email with the details to register for that event. So give you guys a couple more seconds to answer that. And all right. I think that's everyone. So all right. I'm gonna, the rest of the slides here are just kind of an appendix that you guys will get, just some additional information that we'll send out when you receive the deck. We want to just thank you so much for being part of our community, being with us today. We look forward to scheduling those calls with you all and looking forward to more conversations. Thank you very much. Have a great day ahead.